Oil has been on a tear. Pretty much like I said in many of my videos that oil was going to continue to trade higher, which is why one of the original investments that I had spoken of back during the summer months, back during the winter months, was why it was important to get into stocks like, for example, ExxonMobil. ExxonMobil, of course, holding 62s. We are seeing oil trade much higher. As you can see, we finally broke out of, we were pretty much range bound in between here. And like I had said, $65 for crude oil was a key point where it had to break, and we're going to see it trade higher. Welcome back, everybody. My name is Xavier. So we're doing a little recap. I know it's been a little bit of time. I haven't had too much opportunity to do videos as I've been busy with work at the hospital. For those who don't know, I am a nurse, but I decided back last year that I wanted to put together a dividend portfolio. And of course, I'm basically uh, basically doing videos on the journey of creating a small portfolio here. We're roughly going to hit well over 100,000 probably by either the end, more than likely by the end of this month. I would say we'll hit over 100,000 invested. The goal of the portfolio, of course, is to create passive income through dividend investing. One way that I do track it is through a simple dividend tracker, which I do like, which is called trackyourdividends.com. I would definitely recommend it, whether you have a dividend portfolio or whether you just want to track your portfolio from day to day. It actually makes it quite easy. Obviously, I am not sponsored, but this is basically my portfolio. The goal, of course, is to get this to 6,000 annually, which represents 500 a month in dividend incomes. And so I'm basically able to look here at the upcoming dividends on my current portfolio that you can see here. And it basically gives you a nice little way. It tells you what, shows you the month, it tells you what stocks and how much they're going to be paying out to you. And you can just a little calendar down here. And then of course you get to see how much the dividend that is being paid out, the total, and whether it's confirmed or upcoming, and of course when you're going to receive it. And a lot of this, of course, is basically dictated on my M1, where you can see basically right here where I've seen some of the dividend payouts. One reason that I like this, especially during hard times like we're seeing today, especially with periods of inflation, is where you have another source of income. So if maybe your hours get cut or you lose a job, at the very least, you don't have nothing saved up, you have nothing coming in. And so having a source of income from dividends is actually quite helpful, which is one of the reasons why I had started this portfolio. Also for the reason of living abroad, as my goal is to live abroad, because I well know the price hikes that are basically going to be coming for Americans, which is why I talked heavily about getting into food stocks. Food prices are set to soar via supply chain constrictions. At the very least, that is the narrative that we are being told. Whether you choose to believe that is entirely up to you, but it does impact the way that we invest because of the powers that be, which is why I will continue, despite pullbacks, I will still continue to invest in many of these food companies, like for example, KHC, Kraft, Kroger, as all of these companies will do well in an inflationary environment because everybody needs food. Also stocks like Tyson, which all of these stocks I hold in my dividend portfolio. And so of course, if they pull back, it just means I'm going to get a higher yield on the dividend, which I'm fine for. So I don't mind having pullbacks in many of these stocks because these are long-term stocks that I'm going to be holding. And so if they go on sale, well, then that's great. That's an opportunity for me, in essence, to back the truck up on many of these stocks that are solid companies, right? It's very important to pick solid companies. And of course, they have been paying and increasing their dividend year over year. And that's really what's important to me. Now, this month I had actually started putting together another Robinhood account, basically for growth. I still believe it's an opportunity in some stocks for growth. I still will hold some positions related to dividends, as I always like cash flow. One of my favorite, of course, is JEPI, which is JP Morgan's equity premium income, and this basically pays a very high yield based off of writing calls. I also have an account with Webull where I hold positions like Palantir, Canopy Growth, Kron, Viacom, and I basically write calls on these positions every single week, and it generates income for me. Usually it's anywhere between like 450, let's just say 400 and around 500 ish every week, that I write calls for these stocks, and I'm just basically using that money. And then even if the stock pulls back, well, then I'll just buy more on the dip, as they say. I'll buy the stock a bit cheaper, work my way towards another 100 shares, and then eventually start selling calls on those shares. And I just keep on doing it. Many of these companies are going to be around for quite some time. So as you can see, looking at my growth portfolio, you can see the stocks that I have here, which is Apple, BGS Foods, which is a really good high yielding dividend stock. People need food. BGS is a good company that's been around for quite some time. Now, I did want to talk about very quickly, we're going to talk about stocks like Cameco and stocks like Rio are minerals. And if you haven't been paying attention, outside of obviously minerals and many of these products become more expensive in an inflationary environment, whether it's transitory like Powell always talks about, or whether it's more prolonged. We don't know. We'll have to wait and see how the powers that be deal with the certain situation. But there has been a lot of news of China working on nuclear energy, and America as well. Bill Gates recently, right, there was multiple news articles talking about leaks in China. China recently posted that they were trying to advance their nuclear energy, and Bill Gates just recently had been talking about America's need for expansion of nuclear energy. Now, one of the companies that mines uranium is Cameco, right? CCJ. And of course, I saw it here. Now, 18, we're going to look back at the chart. We're going way back at the chart, all the way back here from 2012. So the stock has not traded above 18 since right around 2014. Now, even though it pays a dividend, I primarily bought it for the temporary growth. If this is the narrative that these countries are going to be moving into nuclear energy, whether it's real or not, the narrative is that eventually it will get to chatter of Wall Street, and many of these companies will start to move higher, which is why, as you can see, I've been buying when Cameco dipped. I'm basically buying it. I have some of it in my I have some of it here in my M1 account, but it's also going into primarily into the growth temporarily. Eventually I'll move it out once it moves high enough. Another stock that I do like is Chegg, ChargePoint, Chewy. Most of these companies that I typically want to buy are companies that either have some sort of a service where the goal is, of course, accumulation. And a lot of these businesses are online, and so they're able to expand into the global market and not necessarily be restricted just by territories, right? At the very least, Chegg, ChargePoint, especially with the narrative of EVs being more popular. And so I think ChargePoint is well positioned, and I've been buying shares in ChargePoint. And I will be continuing to dollar cost average into many of these stocks, as well as other companies, for example, like NEO. And I basically pay attention to the levels, and I will either dollar cost average into them every single day, or every single week, or 2 weeks, every single month, etc. That's basically what I'll be doing over the next, I guess, couple of years until we see a little bit of this come to fruition. Like I said, JEPI is basically my income. I can either use that income to buy more stock, right? And then that will compound over time. And I've positioned myself, and I'll be buying more of medical properties trust. And eventually I will write calls in my Robinhood account for additional income, and of course, as well as a hedge. Peloton, I do think that they will do quite well, especially because there's been a lot of talk of carbon lockdowns. So we've had the regular lockdowns because of the bug, and there's been a lot of talk of carbon lockdowns. And I do think Peloton, regardless of the pullback, will do well in the future. And so I'm basically allocating at least, like 100 a week or 75 a week or whatever it is that I've allocated into my Robinhood. And because you have the ability to put in recurring buys, you can buy every week, every day, every 2 weeks, every month, etc. And so I basically have all of these positions on basically recurring buys. Some of them, they're a little bit more volatile in terms of their swings. I typically put them like on a daily buy. If there's very minimal movement in the stock over week, then I'll typically put it in like every 2 weeks or every month. For example, like MPW, which has very little movement. And so I can allocate funds to that either every 2 weeks or every month. These are basically the companies I'll be putting money into. Like I said, Peloton, Roblox, I think will do very well. Redfin, I do like anything related to real estate. Square is basically your fintech, and T eventually when it splits will be a stable dividend, will be a more of a stable dividend, as they've gotten rid of perhaps what people would call as, not very financially sound for the company, and maybe they've offloaded that, and then eventually maybe that secondary portion of the company that the shareholders will receive could be considered a growth company, as a lot of it revolves around media, whether HBO will continue to grow in terms of the services that they provide. And so there is room for a bit of exponential growth with whatever shares that you hold of T. Eventually you'll gain, I think it's like 70% of that will go to T holders. Now, it won't necessarily be under control of AT&T, but T holders will gain the benefit for those who are interested in owning that company, or of course you could just sell it off if that was the case. Now, still holding on to companies like Wells Fargo. I do believe eventually Wells Fargo will go back to paying a higher dividend, especially if rates do move higher, then the banks will benefit from that. Wells Fargo, very solid company in terms of who they pick and choose to lend money to. And I do think eventually they will do well. Currently, we're holding 44s. I am holding my position at 44. And as you can see in my position, we're going to try to keep this video a little on the short end. I'm currently up at almost 2,300. And so if we were to break, I would basically sell off the remaining balance that I am up, right? So I will basically sell enough shares to get back to cost and let the rest of those shares ride. And eventually when it does pay, does go back to paying a dividend, those shares are in essence free, because I've just basically taken out the amount of money that I originally invested, and whatever shares I have left is what I have left and will pay me dividends. And then speaking again on typically what I've been purchasing, right? We're still holding ExxonMobil. ExxonMobil, I believe, will go back to trading into the 80s, as I do perceive, as JP Morgan has said, oil will trade higher. And so we could see oil back to well over $100 a barrel. And so we could also see ExxonMobil again going back to its peak, where oil back during 12, 13, 14 peaked out, and we saw ExxonMobil trade much higher, despite the narrative of the Green New Deal and everything is going to be, energy efficient. I pay attention to what people do and not necessarily what these politicians say. I pay attention to what they do. And I've seen many of these individuals invested very heavily in oil. We've seen a lot of shenanigans going on with oil. And so I will be holding on to my position, at the very least, holding 56s, and I'll do the exact same thing. I'm currently up about 2 grand. So I'll pull out my initial investment, let the rest of those shares ride for free, paying me a solid dividend. As you can see here, paying, what is it, 87 cents a share. I believe ExxonMobil even said that they were going to raise their dividend. So all the more better for individuals like myself. This is basically what I'm doing with my 2 portfolios, with my dividend portfolio and basically with my new growth portfolio. Like I said, we've got about 5,000 in the account currently invested that I put in this month. And then I've got another 1,700 or so in buying power. And so I'll be allocating at least another, 1,500 to 2,000 a month into this account to grow the growth account for the future. And while basically kind of putting in roughly about 1,000 a month into my dividend account, and then just letting it compound over time, as the goal is to basically eventually to be able to live off of that recurring dividend, or have that monthly dividend basically supplement a lot of my expenses moving forward. But we're not there yet. We've still got a couple of more years to work on this. So ideally, I want to wait for at least several years. We'll have to wait and see how that goes out, and then eventually move into some real estate. And those are basically the goals that I'm working on. Of course, that real estate is going to be abroad, hopefully before they close the borders. If you're paying attention with a lot of these different countries, there's a lot of shenanigans going around about being able to move to different countries. So a lot of countries have restrictions about who can come in and who can come out, with either having to get tests, or maybe you've got to take, the poke, which I have no plans to. But this is basically what I'll be working on for the near future in terms of my dividend plays as well as my growth plays. That's basically going to be it. I'm going to leave it here. and I will catch you next time. I'll try to do another one of these. I'm probably going to have to start doing these a little bit earlier because I'm doing a bit more work in the hospital. And so with the time constraint, I'm going to try to do these in the middle of the week instead of doing maybe an end of the week recap, because I work on the weekends at the hospital. And so I work nights, so it's a little bit harder for me to come by, either to get up early or to do these early in the morning when I'm very tired and I have very low energy. And so I kind of want to be a little bit more, obviously, be a little bit more energetic about these videos, and basically going to leave it there. So we'll try to do these at least every Wednesday. We'll do like a middle of the week, and then eventually I'll start talking about the option plays that I do in terms of holding positions, writing covered calls as an additional source of income. So between my dividend and options, it's typically around about 1,000. Let's say I do about 500 a week in options in terms of profits, and then figure like another 500 in dividends. So it can easily be around 2,500 in terms of recurring income, but we'll get more into that in our next video. Thanks for watching, and I will catch you next time. Be sure, of course, to like, comment, and subscribe.